All right, let's dive into one of the weirdest economic situations we've seen in a long, long time. We're talking about a paradox, right? A moment where two totally opposite things are happening at the exact same time.
So check this out. On one side, you have the NASDAQ, that's our biggest, most important tech companies, up an absolutely staggering 56% for the year. But then you look over here and you see that US companies have laid off over 2 million people. It just doesn't make sense. Record highs for the market and record pain in the job market all at once.
And that, right there, is the big question we're tackling today. How is this even possible? How can one part of the economy be signaling this incredible boom while another part is signaling a historic bust? Let's break it down.
So you have to ask, what is actually driving that soaring market? Well, some folks are saying it's not really about the health of the whole economy. They're calling it a hopeful delusion, a kind of euphoria that's laser-focused on just one thing, and it could be hiding some really serious risks under the surface.
You know, economists actually have a name for this whole situation. They call it the K-shaped economy. Just picture the letter K. You've got one arm that shoots straight up, right? That represents a tiny sliver of the economy. Think AI, big tech, the wealthiest households. That's just doing unbelievably well. But at the exact same time, you have the other arm of the K sloping sharply down. And, well, that's pretty much everyone else. And this isn't just a theory. The data shows the top 10% of households are now responsible for nearly half of all consumer spending. Think about that. When so much depends on so few, the whole system gets pretty fragile if that top tier ever decides to pull back.
So let's start with that upper arm of the K. What in the world is powering this incredibly focused boom? It really all comes down to one thing, what we're calling the AI Euphoria engine.
And this number says it all. 69%. That's the average gain this year for just 7 companies, the Magnificent Seven as they're called. This isn't some broad, healthy economic boom. It's a rally being driven by a tiny handful of giants that are basically pulling the entire market up with them.
But here's the thing, and this is a big but. Even this incredibly powerful engine is starting to sputter. The whole story of infinite, unstoppable growth, it's starting to show some pretty serious cracks.
And this is just a perfect illustration. You've got Softbank, one of the biggest, most influential tech investors on the planet, selling its entire stake in Nvidia, the undisputed champion of AI chips. And at the same time, a company called CoreWeave, which is a key partner that actually uses all those chips, just slashed its own financial forecast. I mean, when the smartest money in the room is cashing out and key customers are lowering their expectations, that is a huge red flag.
Okay, so now let's flip to the other side of this story. Let's look at that bottom arm of the K, where things aren't just slowing down, they're actively going backwards. This is the story of the great downsizing.
We saw this number at the very beginning, but it is absolutely worth seeing again. Over 2 million jobs cut just this year. To put that into perspective for you, we are on pace for the worst year for layoffs since the great financial crisis back in 2009. This is a massive, and I mean massive, painful reset.
And here it is. This is the real gut punch. The very same thing that's driving the market to the moon, AI, is being explicitly named as the reason for all the layoffs. A huge private equity firm, Vista Equity Partners, they just came right out and said it. So this isn't some temporary cyclical downturn. No. This is a permanent, structural shift where companies are swapping out human workers for technology.
And if you look at this table, you can see this restructuring is happening everywhere. It's not just one industry. You got Verizon and telecom cutting 15,000 jobs, Synopsys and chip design, AkzoNobel and manufacturing merging to create a new global giant. Heck, even Apple is reportedly planning a major leadership shakeup. This is happening system-wide.
But there's one more piece to this whole puzzle, a kind of hidden signal that's happening in the markets, and it makes this whole paradox even stranger, and frankly, a lot more concerning. You could almost call it a cry for help.
So let me just ask you this. If the market is really so strong, if everyone is so confident about this amazing tech revolution, then why are some of the smartest investors on the planet running for cover and piling into the ultimate risk-off asset?
Just look at this chart. It's absolutely wild. On the left, you've got the NASDAQ, the poster child for taking risks, for betting on future growth, up almost 56%. And then on the right, you've got gold, the ultimate safe harbor in a storm, up over 52%. I mean, these two things should be moving in opposite directions. For both of them to be skyrocketing at the same time is a massive, massive contradiction.
See, a safe haven asset is what people buy when they think things are about to get really turbulent.
A surge like we're seeing in gold, it means that very sophisticated investors are deeply worried about some kind of hidden risk in the system. They aren't just hedging their bets, they're actively preparing for something big to break, something that the stock market, in its state of euphoria, isn't seeing at all.
So where does all this leave us? Well, it feels like we're at a crossroads with these two completely different economic realities pulling apart from each other so fast that it's creating this immense tension across the entire system.
I think the bottom line is this. The economy isn't just one single thing anymore. It's a fractured system. All the growth and all the prosperity is hyper-concentrated in one very small area, while the rest of the structure is getting weaker. And that creates this enormous pressure, this fragility, right at the seams.
So what are the big takeaways here? First, AI is the ultimate double-edged sword right now. It's creating unbelievable wealth for some, and it's causing huge job displacement for others. Second, our economic growth is dangerously reliant on a tiny group of very wealthy people. And third, that unbelievable rally in gold is a massive warning sign that something might be deeply wrong beneath the surface.
And that leaves us with one last, and I think really critical question. How long can these two realities, the soaring highs and the painful lows, keep pulling apart from each other before the entire structure just becomes too unstable and falls apart?
It's a story we're going to be watching very closely. If you found this breakdown helpful, do us a favor and like, share, and subscribe so you don't miss our next explainer. Thanks for tuning in.